So this question is about ethical behavior. Ethical behavior in accounting is really important. Ethical behavior in life is really important, but let's just focus on accounting. So let's look at this. We've got Brad Taylor, and he's just reviewed his internal financial statements for the month of November. And he's dismayed that he might not achieve his profit targets for the year, which end in a month. As a result, he might miss out on a $10,000 bonus for surpassing his target for the year. After consulting with the managers reporting to him, he concludes that something dramatic must happen if he's going to meet his numbers and, of course, get his bonus. An idea occurs to him. He could postpone the start of the marketing campaign that was to start in mid-December to mid-January and avoid having to recognize the expense of developing the campaign until the next fiscal year. He realizes that delaying the marketing campaign by 1 month might impact his sales for the following year, but he's willing to deal with that issue next year at this time. The bonus is really important to him as he promised his spouse a January cruise. Is Brad behaving ethically in how he is approaching the problem? So, one, is Brad ethical? And the answer is no. No. Brad is unethical. And let's just talk about why he's unethical. Being ethical means that he puts the interests of the company ahead of his own. So he is putting his personal interests ahead of the company he works for and is supposed to do the best for. Why or why not? Well, we already answered that question. Okay, what suggestions do you have for Brad in arriving at a satisfactory solution to his dilemma? So, what could he do to meet his numbers that is ethical? What could he do? Because he wants to increase his sales numbers. So, something that he could do that would not harm the company in order to increase his sales numbers. He could go door to door, focus on the current campaign. So, one of the things he could do, because remember, he has a whole bunch of managers, right? He could speak to his managers and have them start cold calling new customers and also calling and connecting to existing customers, right? That might increase his sales because, you know, customers might need something and they're just saying, "Oh, I'll do it next week," right? So if we're making connections with the customers and we're doing cold calling for new customers to bring new customers on board, this could increase his sales without causing problems, right? So going door to door is exactly what you're talking about. Sell more. How are we going to sell more? What else he could do, by the way, is he could review all his expenses, all his planned expenses, and see if there are some unnecessary expenses, which he could eliminate. And these are unnecessary expenses that are not going to negatively impact the company, right? Expenses that are nice to have, but not necessary. So there's two things he could do in order to improve his bottom line to get his bonus without negatively impacting the company that he's working for. Because in the end, he's supposed to be looking out for the interests of the company, not his own interests. So when we think about ethical behavior, it means that we are doing what's in the best interest of the company, not in our own best interests.